Good afternoon and welcome to City Club of Portland Friday Forum. I'm John Horvick, President of City Club, and I'd like to welcome members and guests alike, those of you who join us today at the Governor Hotel, and those of you listening on OPB Radio or watching on Portland Community Media. Today, Joel Ario, Managing Director of Manatt Health Solutions, and Rocky King, Executive Director of Cover Oregon, will discuss what the new health insurance marketplace will mean for Oregonians. But first, some announcements. The generous support of City Club's corporate and media partners ensures that we put on the state-specific programs week after week. I'd like to thank our media partners, including Oregon Business Magazine, our current Friday Forum corporate sponsors, Morel Inc., Northwest Natural, and Schwabe, Williamson & Wyatt. We're grateful for your support and commitment to City Club's mission. Please join me in a warm round of applause for all of them. As we await the rulings from the Supreme Court on DOMA and Prop 8, join us next Friday to understand what the decisions mean for Oregon. We will continue to host Friday forums through July and have a great set of programs coming up. Everything from a legislative wrap-up to a Think Out Loud partnership with U.S. Attorney Amanda Marshall. And also, please note that applications for the GED Research Committee are due at the end of Monday. You can learn more about club events, purchase tickets, and become a member on our website, pdxcityclub.org. As always, City Club will be live tweeting this event. You can follow or mention us at pdxcityclub, and be sure to use the hashtag CityClub in your tweets. Also, we have a Q&A session at the end of today's program. Members, please come to the microphone to ask your questions. And for all our audience participants, please locate the index cards on the center of your tables and write your questions on them during the forum. We'll collect them prior to the start of the Q&A. And now to our program. Oregon is at the forefront of efforts nationally to make health insurance exchanges a reality. Oregon's exchange, now called Cover Oregon, plans to open for business October 1st. Under the Affordable Care Act, state-based exchanges are one of the primary ways that individuals and small group members can compare and obtain coverage. Joining us today are Joel Ario and Rocky King. Joel Ario is Managing Director at Manatt Health Solutions, an interdisciplinary policy and business advisory practice at Manatt, Phelps, and Phillips. He has over 30 years of experience helping to shape and implement public policy, including more than 15 years devoted to leading health insurance reform efforts at the state and federal levels. Rocky King currently serves as Executive Director of Cover Oregon, which will provide a central marketplace for individuals and small employers to shop for health coverage starting in October. Rocky was part of the design group leading up to the passage of the health insurance exchange legislation and is now leading its implementation. And so without further ado, please help me welcome Joel and Rocky to the stage.
So Joel's, we're supposed to change this mic, is that correct? You're going to do it?
I'm going to point it at the speaker, not the bare hand.
Thank you. So I want to thank, first of all, the Portland City Club for having both Joel and I here today. We've worked many years together on the state level, and now he's on the private side, and I'm doing Cover Oregons. But I want to thank the club for having us today. I usually start off with a story or two and a joke, but I have 22 and a half minutes, so I don't have time for a story. So I asked Bruce Bishop what should I do to loosen people up and get them looking up here, and he said, just give the punchline. So I'm going to give you the punchline. I wouldn't have voted for it either. Okay, so some people will get that. I'm going to talk about 7 things today. For those on the radio, they're listening, I'm holding up 2 fingers while I say I'm talking about 7 things, because really I want you to remember 2 of the 7, and you can decide which ones. But basically, talk about the background and mission, the exchange in terms of what it does for individual and families, small employers, what we're doing in training, marketing and outreach, kind of what keeps me up late at night in Durham, where our office is, and finally to talk about the people that we're going to serve. There are 500 to 600,000 people in Oregon that are uninsured today, and another 100 or so thousand that are insured but are struggling just to make the premium payments. We started talking about the exchange over 10 years ago in Oregon. In 2007, the Oregon Health Fund Board made recommendations to the governor and the legislature to establish a health insurance exchange. Unfortunately, Oregon did not have the money to either build it or really to provide the funds that would be necessary to subsidize low-income Oregonians. So in 2010, when the Affordable Care Act passed, that we saw in Oregon as an opportunity to leverage some of our thinking around what an insurance exchange should be and the resources that the federal government could provide us. So the exchanges were a key part of really the Affordable Care Act, and Oregon had a decision because under the act it said every state's going to have an exchange, but it's either going to be a federal-run exchange or a state-run exchange. Which do you want to do? We had robust debate during the legislative session in 2011. And with bipartisan support, it was decided to move forward with a state-based exchange, an Oregon exchange. And the primary reasons are pretty simple. For Oregonians, by Oregonians. When somebody picks up the phone and calls an exchange and says, I need help, I'm from Burns, we wanted to make sure they knew the person on our phone where Burns was. When we said we want to set quality standards for carriers participating in the exchange, we wanted to make sure it was someone in Oregon setting those standards, not somebody in Washington, D.C. When we go out and train the agents and try to get community partners to work with us, to reach out and find those people that can really benefit by our program, we wanted to make sure it was Oregonians doing that, not somebody from Washington, D.C. So we had bipartisan support, business, consumers, labor, really to have a state-based exchange rather than a federal exchange. So what is it? It's really a marketplace. It's a portal that people go to. You picture a house, you walk in the door, and you say, I'm an individual and I'm uninsured, or I'm insured, but I want to see what kind of offerings you have. We have somebody sitting at a desk there that punches in a little information, and we say, you're an individual, go down the hall to the left, we've got a table for you in the kitchen. You're a small employer, you come in, say, I'm a small employer, I want to purchase some coverage through the exchange. We take some information down and we send you upstairs to the master bedroom. You're a child that walks in, we send you to the playroom. It is really one-stop shop that families and small businesses can go to really purchase or shop and enroll in health insurance plans. Now, what's the benefit for individuals and families? Again, one portal. Whether you're eligible for Medicaid, whether you're eligible for Healthy Kids, whether you're eligible for just commercial individual coverage, you can walk in that same door, and we'll help sort out which room you belong in. We can provide financial assistance. That would be for people under 400% of the federal poverty level. We can provide tax credits to help you pay the premiums. And if you're under 138% of the poverty, you can be eligible for Medicaid if you're an adult. Under 300% of poverty, Healthy Kids would be available for children up to the age of 19. So, one portal, financial assistance, apples to apples comparison. We actually have standardized benefits so people can compare one carrier to another and look at quality ratings. They can look at price. They can look at the different benefit plans, but it'll be really apples to apples comparison. Although I will admit, it'll be more like Macintosh to Golden Delicious, because there's always some little difference between them. Price transparency, quality grades, and many of the plans will be HSA eligible, so you can use pre-tax dollars for some of your co-pays and your co-insurance. So we really think there's some benefit for families coming in that door. They'll be able to sort by geography, price, quality ratings, carrier, the type of plan, an HMO or a PPO, deductible, and we'll have the ability to go in and look at whether your provider is a part of that plan that you're looking at. I think we have approximately 12 carriers right now that have expressed interest and have filed plans and rates to be in the exchange and individual market, and they'll be offering over 100 plans. So we really think it is a good marketplace. It's not just a website where you have your choice of 10. you have your choice of 10 carriers with multiple plans underneath that. For employers, we try to design something in Oregon that large employers have access to, and that's really options of how small employers want to structure how they purchase benefits for their employees. So employers have 4 options. One, they can do what they do today. They can go in and say, I want HealthNet and I want Plan B, option 1. Option 2, they can go in and say, I want ODS, and employees, you can pick A, B, or C plans. So employees, you have your choice of plans, but only with ODS. You can do that today, in both the small group as well as the large group markets. But we've gone one step further. An employer can come in and say, I'm going to pick a benchmark plan, Plan B. We call them the metal levels. It's bronze, silver, gold, and platinum. But I'll pick a bronze plan, but you have your choice of all 12 carriers or all 10 carriers, depending where you live. So you have one plan, but multiple carriers that employer's employees can choose from. Then we went one step further and we said, why not just pick a benchmark plan and tell people how much you want to spend per individual on health care, $500 a month, whatever it is. Your employees then go onto our website, got the whole account structure all set up, and they can pick which carrier and which plan they want to enroll in. So that's something that large businesses do now today, but small businesses can't. So for example, somebody may say, I really like Kaiser, so I want my family in Kaiser. Another employee can say, hey, I'm young and healthy. I want a high deductible plan with HealthNet. Another employee may say, I want something mid-level, or they want to try working with one of the new co-ops. We have 2 co-op plans that will be offering through the exchange. So we're really giving employees the option and the choices of both carrier and plans. We think bringing that to the small group market is great. We do all the work behind the scenes. The employer gets one bill. And really what it does is it eliminates the burden on the employer from finding the solution. Now, how many times have you, as an agent or for yourself, have you tried to figure out which plan to buy to meet which employee's needs? Now it's really how much can I pull together and contribute towards health care and let the employee really make that decision. We're going to involve agents. Agents are being trained, so they'll be able to help employers through this process. So, got the portal kind of thought through, and we know what we can do with individuals and families. And if you want tax credits or financial assistance, you have to go through the exchange, whether you're an employer or an individual. What are we doing to get ready? Well, we've already started training. We, over the next, I think it's 4 months, are going to be training between 1,500 and 2,000 agents. We've already started a few. We've had, I think, 2 or 3 training sessions. And they will be certified to sell any plan from any carrier in the exchange. So one of the complaints a lot of people have is they go to their agent and they say, I want this plan, and all of a sudden they don't get that plan. And part of that problem is the agent's not appointed with that particular carrier. But everybody that is certified by us that goes through our training will be able to sell any plan of any carrier. So we really want to get that agent involved. And it's about 95% of small employer business is done through an agent, so we want to really leverage that. And about 50% of business is done in the individual market through agents, and we want to continue that relationship. I can't do anything from Durham, Oregon in Burns, but what I can do is give somebody in Burns a name of a local agent they can sit down and help them with. We've gone a little bit farther than that. We actually are going to contract with, I think now it's a little over 70 community partners, so that in almost every town in Oregon will have somebody where you can go, and we'll have a whole list of where people can go that you can sit down with and actually help you navigate through this portal. So we're looking at about 70 grants that we're actually going to fund people in those communities, as well as the 9 tribes. So each tribe will have somebody sitting physically in that location so that they're able to assist their tribal members in rolling through this process. We'll also be putting out a second wave of grants to help providers bring on folks, and whether it's hospitals or clinics, so that they can also help right there in Redmond, in Portland, in Medford, helping people to navigate this system. We're working with some of the trade associations and business associations now to be able to develop and let them bring in the expertise so they can help their membership. So longer-term goals. Our mission isn't just to get people insured. Our mission is the health of Oregonians. Governor Kitzhaber spoke before the club many times that it isn't just getting people coverage, it's getting people healthy. And long-term, that's our vision and our mission. To increase the health and well-being of all Oregonians. You'll hear our ads come out, "Long live Oregonians." It's kind of our battle cry. First, though, it's access. Let's get everybody under the tent. That's really important. Once we get everybody under the tent, we'll decide what food they can eat, make sure it's healthy, and do all the things that make them survive. But right now, we just really want to get that 500,000 or 600,000 people under the tent in both Medicaid as well as the commercial market. We will look at, in year 2 and year 3, expanding, I think, our focus onto quality and value. It doesn't do any good to get 500,000 more people covered in this state if prices still keep going up 5, 10, 15, 20% a year. So we have to leverage our purchasing power to really start bringing better quality and value into our system. That's one of the things that we're really happy about with the carrier participation. We have 12 individual market carriers. We have 8 small group carriers. And most of those carriers are involved in the transformation efforts that the governor really has started through the Medicaid program. So they're kind of playing both sides, the commercial side as well as the Medicaid side. We think that's good. That's bringing the delivery system, I think, to a better focus. Rather than having one go off and try things one way and another the other way, I think bringing those folks and leveraging the number of people that we can get enrolled in both Medicaid and the exchange to help foster better value and quality is important. So long term, we really want to align ourselves from the metrics with public employees, public purchasers, Medicaid, state's public employee benefit board, the Oregon Educators Benefit Board. We're all trying to really begin to focus on the same kinds of metrics. We want to really transfer what we find that works to the larger and broader commercial market. So, marketing and outreach. July 9th, I think now, is our first ad hits the television. It's going to be a nice guy. His name's Mark, and he's going to be singing "Long Live Oregonians." We actually went out, and North is, some of their folks are here, but we actually went out and asked Oregon artists to submit songs that kind of reflect what we're trying to do. And just dozens, I guess, of submissions were made, and we've kind of selected down to a small number of those that will really form a large number of our radio and television ads. We're filming these people singing, "Long Live Oregonians." We've got a rapper. We've got, somebody, a Spanish community. We've got a Bob Dylan kind of guy. It's really, I think, going to be something you're going to look forward to seeing. And those come out July 9th, as well as our print ads, which we also did. We went to Oregon artists and said, come up with ads. We didn't have the marketing guys sit there and draw them. We actually just went out to Oregon artists and said, here's kind of our theme, get healthy. We want Oregonians to get access to health care. And so they've developed these outrageous ads. That's all I can say. They're pretty neat, pretty cool. So they'll be coming out, I think all of that starts July 9th. Also, we'll have what they call out-of-home ads, which is stuff on billboards and buses and things like that. The key, though, is going to be the grandparent effect. I think everybody knows what that is. Okay. So the grandparent effect, basically, I had to speak to 18 senior citizens from the Woodburn Senior Estates the other day. And their youngest person was 74 and the oldest was 92. And we kind of came up with a way to market Cover Oregon to these folks. So there's one lady in there, 90 years old. She has 5 children, 12 grandchildren, and I think it was 21 great-grandchildren. We figured out 37 of that 38 folks would be eligible to go through the exchange. And the one that couldn't was above 65. Medicare's not, you got to be under 65. We really want to get out there and from grandparents on down begin to tell the story about why it's important to have health insurance, not just from the preventative side and getting that preventative care from a health standpoint, but also from financial side. I know one of the objectives is to get young and healthy, and one of the things we've told these grandparents is tell your kids, your grandkids, to get health insurance so that when they break their leg on Mount Bachelor, you don't have to pay for it. So that's kind of our strategy, is not just to target the young and healthy, but it's really to target that family unit and to begin to understand and help young folks understand the importance of health care. So what keeps me up late at night? Scope of work. I have 500,000 plus lines of code, 1,500 web pages. I'm trying to bring together the Children's Health Insurance Program, Medicaid, commercial individual, commercial group market. We're doing, I think Joel will talk about this, probably more in any other state. We've really bitten it off, and that keeps me up every night, is whether in fact it's going to work. Number two, 13,000 pages of regulations. It's really, it's daunting when you start to look at the amount of regulations that have been put on states, both in the insurance agencies and carriers, as well as the exchange, just to make the Affordable Care Act work. I was on the phone with the director of CMS earlier this week, and she said, "What can we do for you?" And I said, "Please just give us the room to make mistakes and be out of compliance. I want to ask for forgiveness. I don't want to ask for permission." So when things don't match up quite the way you wanted them to do, they match up at least what Oregon wants to do and provide some of that flexibility. Third thing is managing expectations. 72 Honda didn't have auto key lock. It didn't have power windows. It didn't have a CD player. And a lot of them got recalled when they first came out with them. But that second year, they added the CD player. And the third year, they added the leather seats and the heated seats. So part of what I want to do is manage expectations. I'm trying to balance features and quality. The more features I have, the less quality. The more quality, the less features. But no matter what happens, Amazon, Apple, Microsoft, when you come out with a system, I guarantee you, day one, it'll crash. I guarantee you, day two, it'll be up, and it'll work an extra hour or two longer than it did day one. But somebody's going to get to web page 1200, put yes in a check box, and the system is going to go down. We're going to fix it. We've got the team ready. We've got the IT folks, the communication. We're going to be talking with the carriers. We will make sure that every day for the first 6 months, this thing really works and works well. Finally, the other thing, I'll close with this, keeps me up is federal delay. I don't give a hoot about the politics. I don't give a hoot about Obamacare. I don't give a hoot about R's, D's, Tea Party, liberals. We got something that's good for Oregon, that Oregon wanted before the feds moved forward with it. We've got the resources now. We want really no federal delay. We want them to pressure us to come out in October, January 1 effective date for coverage. Because if we delay, then the waitress in Bend, the young architect trying to do it on their own here in Portland, may not have the access and the resources to purchase that health insurance. Our obligation from Cover Oregon's side is not to the feds, it's not to the press, it's to the people of Oregon, who I think deserve this opportunity to do what I think most of us probably already do, and that is be able to afford health insurance. So with that, I'm going to turn it over to Joel and let him go.
My thanks to the City Club, too, and my thanks to Rocky for being here, leading this effort and really making Oregon a leader on the exchanges. He has given us good grounding in the exchanges. And so I'm going to take us back a little bit, history of the exchange concept, and then a little bit forward into a crystal ball and what we can expect in the future, and a couple stops along the way. But I do have time for a quick story in my part here as well. So I'll start with that. The priest gets on the airplane, and he's been out in the hinterlands seeing the parishes and doing a lot of noble and good work, and he's ready to relax and have a glass of wine and kind of take it easy on his way home for the weekend. Unfortunately, the seat next to him gets occupied by a young college kid with a backpack. He sees the collar on the priest and decides that it's time for a lecture, and so he just takes after the priest. What is it with pedophilia in the church, and women don't get their fair place in the church, and you have all these big buildings in these poor neighborhoods, and there's just case after case of abuse in your church, and what are you going to do about it? And so finally the kid, after about a half hour, takes a breath, and the priest reaches over, puts his hand on the kid's shoulder and says, "My child, after 30 years in the church, it is so much worse than you can imagine." And I like that story because the two aspects of it that I like are every job I've ever had, that's been true. I listen to the critics, and I say, you know what, that's sometimes a pretty good criticism, but you know what, knowing what's going on here and the way I know about it, I could double down, triple down on that criticism. It's a human enterprise. It's going to have failures, and as Rocky tried to capture there, things not going to be perfect. Nothing is on day one or day 100 for that matter, but we continue to try to improve it. The second part of that story, though, is obviously the priest had that sense of perspective because he did have a vision, and there are many good things. You can look at things half empty, you can look at things half full. I'm going to try to spend my time looking at the half full side, and so it's kind of a disclosure. You'll see I'm on the always on the hopeful, optimistic side of this equation. So I got started in insurance back here. This state is near and dear to my heart. I came here in 1987, met my wife. We had our 3 children in this state. I thought we'd stay here forever, but we did get involved in insurance regulation, or I did back in the 1990s. I had the opportunity to meet Rocky, and the first thing that I learned as an insurance regulator here in Oregon was that where insurance worked best was in the large group market, where you had a big pool of individuals, and you had a purchaser who had some leverage with the insurance companies to kind of negotiate deals. And in general, they kind of negotiated pretty good deals, and usually had more than one option for the employees so that an employer could go pick. Back in the 90s, it used to be a kind of book like this, pretty thick book you had to wade through. As time wore on, it became a web page kind of system, and so you had a very thin book that basically just said, here's your choices, refer to the web page for more details. So the system has moved in that direction, and the exchanges really wouldn't be possible without that kind of movement. But a lot of what we did trying to make the individual market and the small group market work was to try to see what worked in a large group market and then emulate that in those other markets, build bigger pools, create more leverage, prohibit certain kind of discriminatory practices by the insurance companies and so forth. And then about 2003, I'd kind of moved through the ranks and was heading up the insurance division here by that point, and the legislator called me over to the legislature, and I always said, yes, sir, when I got called over there, and said, I've got an article I want you to look at. Seems like a new concept in insurance, and it was by a fellow named Ed Hasselmeyer at the Heritage Foundation that was singing the praises of exchanges. And what I liked about it immediately was it basically did frame it in terms of, in large groups, you have these choices in a marketplace, and you get to pick, the employees get to pick, and why can't we have that for everybody? And the way to do it is to create these exchanges, he called them in that article. And I became a total devotee almost from day one of this, and Corey and others in this room will remember how obnoxious I was for my last 4 years here in Oregon, because I was constantly saying every time we had a discussion of insurance reform in the, at that time, Kulongoski administration, why don't we take this exchange concept and build on it? And then when Massachusetts passed the concept and put the mandate in there, which is an essential part of the concept, I got even more obnoxious. Now there's a state doing it. Let's really do this here in Oregon. And of course, it was very hard to do that at the state level. I then moved over to Pennsylvania and was the insurance commissioner there for 3 years. And I learned another real important lesson about the marketplace, which is I'd sort of taken for granted kind of some level of competition in the marketplace, because Oregon has a couple big carriers, Regents Kaiser, have good market shares, but not 50 or 60% market shares, like 20, 25% market shares. And then there are at least another half dozen insurers who have a real strong toehold in the market. There was aggressive competition in this marketplace. When I moved to Pennsylvania, it was for the purpose, the government wanted me to review a proposed merger between the two largest insurers in Pennsylvania, and they basically argued that, you got to let us merge because the only way to control costs in the healthcare system is for somebody to be really big and have a big club and really club down the providers in order to keep rates down. Sort of, in essence, a single payer type of concept. And I looked at that very carefully, hired a whole team of people, Blackstone, and to do the economic analysis, and other people to be involved in the analysis. And after a 2-year process, I decided it wasn't a good idea to let these companies merge, that I would put my money more on competition than I would on a kind of, consolidation in the insurance industry. And the day after the decision, I was sitting with the two CEOs of these two large insurance companies, and we were talking for about an hour, kind of informally. And finally I said, what's kind of interesting here, if I'm getting the drift of this, what you guys are saying is that this person who you started in the Ralph Nader network, when I first came here, ran Osberg, was my background. This kid from the Osberg and the Nader network is really in favor of competition in the marketplace, and the two CEOs here are really in favor of a more European kind of single payer system. And one of the CEOs says, you have it exactly right. That is what we need. But that's not, I don't think, what probably wouldn't work politically here, even if it was the right antidote for the system. And I don't think it is. I think the competition through the exchanges is the right way to do things. I then had an experience after Pennsylvania of going to the federal government because I was so obnoxious about exchanges and such a devotee of them. I actually got hired by the federal government to help set up the regulatory framework for the exchanges in 2010 and 2011. And I totally buy what Rocky said, which is my experience at the state level convinced me to coming in there that the very best way to build that regulatory framework was to have the states as much as possible in charge of this operation. Federal government had to set the basic parameters for the marketplace, but states needed to be in charge of the details, the implementation of the models. And we built that kind of regulatory framework. It's what the law said should happen. 16 states, including Oregon, took up that challenge and are going to be running their own exchanges going into 2014. My biggest disappointment in that year that I spent in the federal government and the time I've spent since consulting is that 34 states did not take it up. 34 states are going to be in a federal exchange, and the federal government will figure out how to do this. I think it will get done in all the states, but I don't believe it'll get done as well in the states where the federal government is doing it in general, and I look forward to the day when more of those states move towards state-based exchanges. I've had more than one conversation with leaders in some of these states who are kind of bemoaning the way that the politics have shaped up here, and the fact that, if you're a Republican governor or a Republican legislator and you propose to be in a state-based exchange, in most states you're bargaining for a primary challenge, and it's a very difficult political decision. Hopefully we get past that framing, but more than one, particularly Southern politician, has kind of observed, the last time we said to the federal government, we don't like your civil rights laws and we're not going to do them, and then the federal government ends up coming in and doing stuff for the state. It wasn't real easy to get back state control. In fact, some of those states are still fighting to get back some of the control that they lost in the 1960s. So I hope that the states will, before long, wake up and move in the right direction. But that's kind of the broad framing of the history. So where are we today, and what are the kind of next steps on these exchanges? Well, I do think if you take a snapshot today, that the kind of view that the states that are taking their own exchanges are going to do better than the states that are not is generally shaping up to be true. We've seen in Oregon and in California, in Washington, in Colorado, in Maryland, Connecticut, that in general, there's pretty good insurer participation in these exchanges. Rocky talked about the 12 that are participating here. So the RWJ Foundation just did a study, and they found that if you look at a baseline before reform and today, that in 6 of the 10 states that they looked at, which were state-based exchanges, more insurers participating in the exchanges than there were in the baseline year, and the other 4 were even, nobody retracting. So you're going to see some states, particularly smaller states, where there isn't any competition today. Not every insurer is bending over backwards to get up to North Dakota anytime soon, but there is, in the larger states that take on the exchanges, pretty good track record. Fortunately, it's not so bad even in some of the bigger states that are in the federal exchange. So Michigan and Ohio are federal exchange states. They both have 14 insurers participating because they're big metropolitan states. So a couple lessons there. One, I think states that do it themselves likely to do better. But number two, the new law is not going to be a panacea. It's not going to change competitive dynamics overnight. And so the smaller states, there are about 25 states that are dominated by one insurance company in these individual and small group markets. It always has the word blue in its name, and that is the nature of the marketplace in about half the country today. But if you look at Massachusetts, the Blue Cross Blue Shield plan is losing market share, still a very good competitor in there with 40% market share, but not the 80% it had previously. So I think it's going to take some time in some of those states, but over time it will come to the right place. Rates is even a better story. Kudos to Oregon, was the first state to not only publish information about rates, but put up a searchable database to look at comparisons and to give comparisons. The 40-year-old non-smoker has become the national model for where you compare the rates, take a very specific standardized plan and compare it across plans. And what you find in Oregon is what you're finding in most places, which is before the law went into effect, the CBO projections, other Milliman projections were around, $400 to $500 per month for a silver plan in these exchanges, which is a kind of, moderately priced, low-end priced plan with a fair amount of cost sharing in it. The rates are coming in more like the high twos, low threes in a lot of cases, but also just like Oregon, the lowest rate was 164, the highest rate was 450. You do see a lot of variation in these rates, a lot of different ways of looking at the competition. One of the things I like to cite is one of the CEOs I was talking to right as these first rates were coming. I said, so how are you pricing? Because the actuaries look at this market and they say, you know what, we price by looking in the rearview mirror to figure out how to predict the future, that we use past experience, and we don't have much past experience with a change as mammoth as this change. So they're tending to give the CEOs a pretty big range of numbers. So it's like, well, what are you doing in your company? And he said, I told my actuary I want the lowest price possible on my home turf and the safest price possible everywhere else in the state. So what we hope is that there's enough insurers competing and there's home turf everywhere in the state, so there's always a pretty good deal for people, but it's going to take a while for it to shake out. But I think the rates are actually pretty good. And then we'll see other interesting issues. We'll see in these exchanges, which I think really are going to become very quickly, within the next 10 years, the way almost everybody purchases insurance. Not just the people who are going to be in these exchanges, but also the large employers. Because guess what? There is a whole marketplace out there full of Towers Watson, Mercer, and Ann Hewitt and others saying, that exchange experience that's getting all this attention now, your employees could have it too, and it would be kind of a middle ground between you having all the responsibility for figuring out what to do every year with health care and simply getting out of the business, which now you're going to be penalized if you do with a mandate. But instead, you can kind of take your employees, send them into an exchange with a contribution, however you want to do it, defined contribution, defined benefit, and they can have the same kind of market experience that's going to get publicity. And I look at my boys and I see that they don't like to go to the store anymore. They like to look at the web, figure out if they can find the product on the web, and they like to purchase it right there. I now look at the web for the first time in the last couple of years. I don't still like to purchase. I want to go to the store and touch it and feel it before I buy it. But, over time, more and more people are going to be purchasing in these marketplaces, and I think those marketplaces are going to become so much more transparent and consumer-oriented. You're going to see the large insurance companies marketing. We all know Geico and State Farm and Allstate, and we can talk about which characters represent those guys on TV and so forth. You're going to see that same kind of competition in the healthcare market for brand recognition and really retail zeroing in on the consumer. And I think it's all going to be very good for the consumer. Again, it's not going to happen as fast in some states as other states, but in general, we're going to move in this direction of that kind of competition. So a couple other points about the federal exchange. For people, usually when I'm out and about, people say, well, so is that federal exchange going to be ready on time? And my answer is, if the federal government hadn't made all the policy decisions it needed to make by now, probably not, because the federal government takes a long time to make big policy decisions. They all really should have been done by last June. They weren't done until March of this year, some of the important ones, and that's contributed to some of the big national carriers not playing as much in these marketplaces as people expected originally. But those decisions are now behind us, and so what's in front of the federal government is kind of the long, hard slog, the grinding out of building the IT system, not building it anymore, testing it and finishing it on time. And that is something that the federal government does know how to do, and they know how to do that pretty efficiently. The people that are in charge of this, like CGI, the contractor, they build a defense installation work for DOD, and it's always remarkable to me that people that have the least confidence in the federal government to do things on the domestic side tend to have tremendous confidence in our ability to project power around the world and manage all kinds of situations. This is more like that sort of situation. It's a technical challenge of managing, building something, and so I put my money on the thing being ready, although the truth is the only people who really know are some of the leadership in some of the contracting agencies who know exactly how the testing's going and so forth. But I would expect there to be no delays. The president, this is his major legacy item. If it's not done during his term, it's probably not going to get done the way he would like it, and I think he's going to make sure that the pressure's on to do it as quickly as possible. So if there were any delays, and again, I don't think there will be, I would guess that it becomes like, well, we'll delay that 15 days or a month or whatever. There have been some delays on specific things. So I think the federal government will be ready in the 34 states, and Rocky, you will get to start the Oregon exchange on time. But again, you'll see when you look at that what happens in 2014. It's going to be an iterative process like Rocky described. I think it's not, none of these are going to start right out of the box with the perfect model. But one of the really good things about the 16 states that have done state exchanges is we'll see tremendous variation in those models. You can look at the state of Vermont, which basically wants to take its public exchange and make it into a single payer for the state. So, you know, this is the marketplace for all Vermont citizens. Probably easier to do in a smaller state like Vermont, but you can look at another small state on the other end of that continuum, Utah, which has always basically had the model that, you know, we want to do a little bit of government kind of involvement here, but basically we want to privatize the whole thing, outsource it as soon as we possibly can, and let the private sector run it. And you have everything in between. You have Oregon wrestling with how much do we standardize products in the exchange. We have states wrestling with, are we going to use our leverage like a large employer would to be an active purchaser, or are we going to kind of let all the insurers that want to participate, all the products that they want to file, how much are we going to try to manage the process? And we as a country will always disagree about those things. There'll always be people who will want regulation heavy versus people who want regulation light. There'll be people who will fight about whether the subsidy levels are affordable now or whether we need to have less or more. But if we can get to a point where these exchanges become the paradigm for how to get coverage, it's a transparent marketplace like most web marketplaces are, where consumers are in charge and companies are competing on a retail basis for the business, and the only fights we're having is how much the government should regulate it or how much the subsidies will be, we will be in such a better place than we've been with our healthcare system. And I do think that's the future. I look forward to some questions here. Thank you.
Thank you both for your leadership and helping us understand today how Oregon is going to manage healthcare reform. And now if you have a written question on your index card, please hold it high so City Club staff can collect it from you. Our first question for our speakers, as always, will be from today's Friday Forum board host, Pat McCormick. Pat has been a City Club member since 1969 and is our immediate past president. He is currently a partner in AMPMPR, a public relations firm he founded in 2010 with his daughter. Pat?
Thank you, and thank you both for the presentation, and welcome back to Oregon. Joel, it's good to see you here. Cover Oregon and the aspirations that the Affordable Care Act has laid out focus on health and wellness as well as health care coverage. I'm a small business owner, so I like the outline of what you were talking about, Rocky, and what Cover Oregon is going to offer. How does what we're seeing with Cover Oregon connect with what the Affordable Care Act has and what Oregon has in terms of coordinated care organizations? The benefits that I'm going to be able to access through programs that are available in Cover Oregon, will they cover benefit challenges like pediatric dentistry, mental health care, and those kinds of things?
Okay, are we on? Is it working? Okay. The Affordable Care Act provided for 10 essential benefit packages, or benefits, excuse me, in the essential health benefit package. So it is probably for the individual market really an expansion of benefits that are going to be available to most individuals that either have coverage today or will be going in, with no copays for preventative care and things like that. You know, the CCOs, the community care organizations, is a great initiative. We're really trying to model out how we can transform care and basically do more with less and then do it better. And that it's not the community care organizations that I'm really excited about coming into the exchange. It's the coordinated care models that they're testing out, different ways of providing those services in those local communities, and how to marshal different parts of those communities to provide that care, whether it's, you know, care teams, whatever it may be. I think that the exchange is really in a great position, whether it's Kaiser, Providence, ODS, MODA, I can just go on Family Care, Trillium, Ario, on and on. Almost every carrier that's involved with Cover Oregon is going to be offering coverage, is involved in that kind of grand experiment and is testing out those models. We see the ability of porting those lessons learned over to our coverage and our offerings, especially in year 2 and 3, as really the key to whether or not the exchange is going to be successful. Again, 400,000 people, 300,000 people in the exchange is not what we ought to be measuring the success of this real experiment by. It ought to be the health of Oregonians, and that's what we really need to focus on. I think it's a great question, Pat.
We'll now take questions from the floor. We invite members to the microphone to ask their question. Asking questions at the Friday Forum microphone is a benefit of City Club, and membership is open to everyone. Before asking your question, identify yourself as a City Club member. Please only ask one question, and ask your question as succinctly as possible. If I flash the question mark card, it means wrap things up.
Hi, Tim Nesbitt, City Club member. Hello, Joel and Rocky. Thanks for your presentation. The question is, what does all this mean for the future of employer-sponsored health care, and separately, for the role of employers in financing health care going forward?
Well, I think in the first couple years, no big changes. There's been many different studies that have looked at this. There are a few outlier studies who suggest a lot of dumping of employers into the exchange, but most of the studies say that won't happen, and I think increasingly you have pretty good information that suggests that for at least the first couple years, employer-based coverage stays where it is. If the only thing that's changed for the large employers here is that tomorrow, if they drop coverage, they pay a penalty for it. So the economic incentives that are there today stay there. There's another one added to the mix. So I think that's how it operates for the short run. In terms of the long run, I think where our system goes is an open question. It is possible that this exchange model works to be the kind of main way that people want to purchase insurance, and it becomes a trendy thing and a consumer-driven thing in the larger marketplaces as well. Then I think employers continue to stay in the marketplace and send people probably into private exchanges rather than public exchanges. They're going to be both kinds, and probably the private side exchanges will have more people in them over the next 10 years than the public exchanges, just because that's where the numbers are, 170 million people or so in employer-based coverage. Whether that ultimately then leads to a change in the way coverage is financed is another open question. Already there's the Cadillac tax that says if their plans are too rich, they're taxed, and there are going to be efforts to say, can we afford the employer-based tax deduction now, or should we put that more into individual subsidies and so forth? So I think the long run with where this works out is not there. And you could see, to use a piece of legislation a lot of people here are probably familiar with, the Wyden-Bennett bill, which had us moving towards the individual market. Of course, this law could be towards that kind of Wyden-Bennett plan on the glide path over time. But again, in the short term, I don't think you're going to see any real significant change in the way employer-based coverage works.
Hi, Amy Harris, City Club member. You mentioned that rates range, right now the estimates are about $165 to over $400 a month. And for a low-income family, even the lower rate might be unattainable. Can you talk more about how the tax credits and other rebate sort of things might work, and what percentage low-income earner might actually wind up paying of their coverage? Thanks.
So I'm not really good at remembering numbers, so this is going to challenge me a little bit. Up to 400% of poverty, you're eligible for a tax credit. That'll be a sliding tax credit. You, depending on what your income is, anywhere from 138 up to 400, your percent of the premium goes from 2% up to 9.5%. So it really depends on how many people in the family and what that total income is. Below 138, again, you're eligible for Medicaid. Kids are free up to 300% of poverty level. State of Oregon, you know, under Governor Kulongowski, and Tim, who asked that first question, great policy. We're going to really focus getting kids coverage. So we've really kind of expanded on that and set up to 300% now instead of 200. It's free, no copays. The health of our children are our future. That's what we're going to focus on. We've been successful. We brought kids' uninsurance rate from 12 or 13% down to about 6%. We're hopefully going to do that with the adults. Under 250% of the poverty level, not only are you eligible for a tax credit, but there's also the subsidy. The federal government will subsidize copays and deductibles and maximum out of pocket. So it really is a sliding scale up to that point. We don't know what the rates are going to be in terms of their final rates. All you've seen is the proposed rates. The insurance division now is going through and analyzing those. And the last week of June, the first week of July, they'll start announcing what those final rates are. I suspect you'll see those top folks come down. I don't know if the bottom will go up, but the top folks will come down. We know carriers have already said, we believe the press set our rates too high and came in and kind of asked for some adjustments of those. So I think in July we're going to be able to give you some real examples on our website, coveroregon.com, of here's your income. You can go onto that site now and actually punch in your income, a number of kids, number of adults, and it'll come out and give you a estimate of what the impact is for the tax credit. By the way, the tax credit can be taken in three ways. One, you can take it right there on the spot. If your premium's $300 and you're eligible for a $100 tax credit, you can say that's what I want today, and you only have to pay $100. There's no cash flow issues. The feds pay the carrier the $100. The other way to go is you can say, nope, I'll wait to the end of the year, true it up, and if I'm eligible, whatever I'm eligible for in the tax credit, I get that back as a refund. And the third way is you can set something in between. So take 80% of the tax credit initially and get some back at the end of the year. So people will have to make that choice.
We have a somewhat related question from an audience member. They ask, how do you determine what quote-unquote affordable coverage is when you have a mandate without concrete cost controls?
Well, when you say people have to buy insurance, that you do have to define what insurance means, and that's the purpose of what are called essential health benefits here, set the minimum standard for coverage, and so that is the answer to that question. And one way to think about it is the average cost of care in the country, if you take health spending and divide it by the number of people, is around $8,000 a year. And so you want to have a system in which everybody has to participate to a reasonable level, but you don't want to have everybody have to buy exactly the same thing. So essential health benefits set a minimum standard there. I think in general, you hear this on both sides about the essential health benefits. Some people say, well, why do I have to buy all the way up to essential health benefits? And then the next person in the marquee says, well, why do I have all this cost sharing? Why don't the benefits take more? So it's not going to please everybody exactly how that line's drawn, but it does set a basic minimum standard. There is a lot of cost sharing. In a silver plan, it's set at 70%, whatever the value of the plan is, the person has to contribute up to 30% through cost sharing of the cost of the plan, which is a significant amount of cost sharing. So there's going to be more price consciousness in the marketplace because people will be conscious of, are you choosing silver, am I choosing gold? Am I choosing bronze? And then I will have cost sharing. Like Rocky says, if you're down the lower levels, closer to the poverty line, you're going to get some help with that too. But in general, people are going to have some skin in the game, and they are going to have to, pony up to this minimum level. The one other important point is you're always trying to balance things in this sort of equation, and there is for people under 30 and people for whom the coverage that they offered by their employer is not affordable. There's a definition of that in the law too. More than 9% of your income is not affordable. For those people, they can buy a catastrophic plan, which basically is a high deductible type plan. That's only available to people under the age of 30 to meet the requirement of the mandate. But in the end of the day, if you're going to tell the insurance companies you have to cover everybody who walks through your door, people need to also have an obligation to purchase, or we know from experiments in various states the system will not work.
Can I just give a short answer to that real quick? I hate the word affordable, because what's affordable for this table is not affordable for that table. And we're really going to have to look at how we apply that standard of affordability to provide fairness for those that earn $25,000 a year versus those that earn $100,000 a year. So I hope we get so it's affordable, but that's really a loaded word, because no matter what answer you give, half the room's going to nod and the other half's going to shake no.
I am Spencer Ehrman. I'm a member of City Club. Thank you for your presentation. Insurance companies, in my experience, are in business to make a profit, and they don't make profits by paying a lot of claims. To what extent, if any, the governor stood in this room, I believe, in his address. One of his points was about health outcomes in the state of Oregon. To what extent, if any, will the insurance exchange hold insurance companies accountable for the coverage decisions they make, which in my experience sometimes seem fairly arbitrary, in order to ensure positive health outcomes for the citizens of Oregon who are participating in the exchanges?
So that's a great question, and there are two pieces to it. The first is, how do we hold them accountable for outcomes? We have identified initially 11 health metrics that are 13, I'm not sure now it got me, that we're going to actually hold those carriers accountable to reporting to us. They go into the quality grades, whether it's percent of immunizations, whatever it may be. There are three kind of different categories. You can go to our website and take a look at that. So from the accountability side, from a health outcomes, that's the start, and it's only a start. Again, year 2 and 3. The other question you ask is the ACA does provide some great things in terms of consumer protections. One of those is 80 cents of every dollar in the individual market has to be spent on claims. And if it's below 80 cents, you got to give a rebate. And companies in Oregon did have to give rebates. In the small group market, that's 85 cents of every dollar. I will tell you that I think, and Joel been gone too long, but I think we pay somewhere above 90 cents on the dollar on average in the state. For every dollar in premium, the companies are paying out about 90 some odd cents for claims. The other thing I want to say is most carriers earn about 1 to 2% in terms of whether it's profit, you call it profit or building reserves. So we can all argue about the pay of executives, in insurance companies and all that good stuff. But the reality is most of those dollars, I think, are going to be paying claims according to the law and according to the ACA. And in Oregon, we're actually doing better.
If I can just add a brief point there, up until today, insurance companies basically compete in the individual and small group market over selecting the better risk rather than getting the worse risk. They have a lot of actuaries who slice and dice the pie to do that. Under the new system, they've got to compete the same way they do in large group, which is they don't get to say to the employer, I want to cover these 90% of your employees, but not these 10% over here. They take the whole pool together and compete over how efficiently to deliver to the whole pool. So that's the makeup of the new law. Our insurance company is going to continue. Do they have some risk selection in their DNA? Yes. They're going to continue to have that, and we're going to have to continue as regulators to address that, and they will try to compete by, dividing the benefits in different ways and confusing people. It's always part of that game. But again, because benefits are now more standardized, those kinds of things are going to be much more difficult to do, and I think the winners in the future are going to be the companies that are more oriented towards serving the individual and small group market the same way they serve large group, figure out how to deliver a better product to the whole group instead of trying to get rid of the people or deny the claims of people that are on the expensive end.
I'm David Cannon, City Club member. I'm a small group employer, and I'm very sympathetic, Mr. King, to what you're saying about your daunting tasks that are keeping you awake at night, and this question kind of relates to that issue. It's really a timing question. Like pretty much everyone I know that's a small employer, we've heard from Cover Oregon and elsewhere, talk to us October 1st. You're going to get answers October 1st, and October 1st is the magic day. And we're kind of worried that your phone lines and email folders are going to melt down the first week of October. So I guess it's kind of a two-part question. How are we really going to be able to sit down as employers and employees and deal with everything in October to try to get a glimpse of the world we're going to be living in January, some of us? And secondly, maybe, are there going to be sources of information that are specific about rates and some of the other things we don't know yet before October 1st?
Okay, so I want everybody to know my strategy on phones on October 1st. We could have, I told you, we've got probably 150 people. We could get 100,000 people calling day one. So I've instructed our call center management staff to not answer the phone on the first day. Okay? Guarantee you the system's going to break day one. I guarantee you it's going to be tough for people to get through. I can't bring on 3,000 people who know every city in this state, who know the CHIP program, who know Medicaid, small group and individual, and train them and pay for that for 30 days of work. I can't afford to do that. So it is going to be tough when you first come in. This is why we're trying to work with the local agents and the community partners. We have 350 different training sessions with community partners and agents so that you'll be able to go to at least our website and find out somebody in your community that can answer your questions and can sit down with you and help you through that process. Our goal is October 1st. I will tell you, if I don't open it October 1st, I'm fine if it's October 2nd or October 3rd. The issue is we want it to get up and we want it to run, and I guarantee you that day 2 will be better than day 1 and day 3 will be better than day 2. Expect problems. The information will not be out there until October 1. And you can get a lot of stuff if you go to our website now, just general stuff, but rates and plans, they're not even approved yet, so there's no way to put it out. But anyway, don't call me on October 1st, please.
We've run out of time for broadcast today and for further questions, and we'll have to stop. Please join us next week for the Supreme Court Speaks on Marriage Equality, the Implications for Oregon. And as we close today, please join me in offering our sincere thanks to Joel Ario and Rocky King.